I always thought that Russia will not attack Ukraine, at least not a full-scale war. There was too much at stake to take such a drastic action, but Russia shocked each of us, and on 24th February 2022, Russia attacked Ukraine. Just a week back, on hope of no war and market rebound, I had invested 3 lakh rupees in my portfolio. With this drop, we'll invest more. But before that, let's analyze the current situation. Hello everyone, I'm Rakshith Pai, and in this video, I'll explain what should we the retail investor do in regards to current situation. Let's get started. Equity portfolio in loss. The equity market had reached an all-time high in November and again in January. Since then, we are crashing down such that the Nifty has already lost over 2000 points. But this crash, or let's say correction, was due to higher inflation. Watch this video to know more. Link in the description. We knew there was a correction due in the equity market. We knew it was right around the corner. But I thought that since the market has peaked and due to inflation, the companies are posting reduced earnings, which makes the already peaked market seem overvalued and thus a correction. Never had I thought that there would be a war and that will bring market correction. Here we are. Going forward, primarily, do not panic sell. Wait for the situation to dial down. The market has already corrected over 4% on day 1 of war, and surprisingly we had good recovery today. But Monday will be a bit tricky. You'll not be any better off selling now. Selling now on the hope of bottom fishing during such an uncertain time is not a wise decision. Secondly, and most important, do not panic buy. SIP during such a time is the best option, but before you invest, spread out the allocatable amount into 3 parts. I call it a 1-to-1 strategy. This means investing the first 25% of the allocatable amount as and when the market opens. Not immediately tomorrow, but spread out over various market sessions until the first week of March. Then the second part, invest 50% of the allocatable amount by the time we get clear direction regarding where the war is at. So this investment is after when things get normal. And the final 25% should be invested post Q4, that is after March month, because we are expecting interest rates hike from the Federal Reserve by the end of March. This way, our final portion of 25% investment coincides with the Fed rates hike. Gold and crypto market negative correlation. We always had worries over how cryptocurrency would react to situations, be it geopolitical or economic. And we now know that they are no hedge against anything. In fact, based on the performance, cryptos are more volatile than other assets. Wherein the real hedge, gold and silver, are performing exactly as they should have. Both gold and silver are going up while the equity market is correcting, wherein crypto market is more aggressive and thus crashing. This is the table of the most known cryptocurrencies and their performance in the last 24 hours or the first day of war. When we talk about asset allocation, we need to look for asset correlation for one another. Equity, crypto and gold have negative correlation, wherein if equity or crypto goes down, the gold market goes up, similar to what we are seeing now. Take a look at this chart. Here the negative correlation between gold and Bitcoin is very visible. Asset allocation will balance your portfolio returns. It reduces volatility, but as of now, crypto has disappointed by being positively correlated to equity. There's more to know regarding crypto market. I'll explain in detail in my following videos. How to asset allocate. If you are a conservative investor expecting 6 to 7% return with reduced risk, then asset allocation is extremely important for you. Invest in equities for sure, but also own gold, silver and bond, because when one of these assets go down, the other will help you balance your portfolio. If you can sustain moderate risk and expect a 7 to 10% return, then your exposure to equity should be more, say 60 to 70%, wherein the rest 30 to 40% can be invested in gold, silver and bond. If you are ready for a higher risk and would take chance for better returns, go all in equities and part crypto. This is my personal portfolio. This is how I have allocated. For various reasons, I do not prefer to own bonds in my portfolio. And that's all about the current situation. Hope this video was helpful. If you feel like you have learned something, please like, share and subscribe. Thank you for watching.